currencies ended the first quarter of 2017 on a solid footing. They have extended their gains in March as well. But the rupee is one of the standout performers. Samir Goel, head Asia macro strategy at Deutsche Bank, joins us to discuss whether the structural story of the rupee is changing. Morning, Samir, and that really is the question of this discussion. The rupee was expected to go from 67, 68 to closer to 69, even as late as November, December last year. But now the story is absolutely turned on its head. Are we looking at 60 in a year or so?
Yeah, hi, good morning, Lata. Yeah, you're right. I think the rupee has been a pretty standout outperformer, both obviously within Asia, where in the last 3 months it's pretty much the strongest currency, but even within the emerging market complex, one of the top three currencies among EMFX in general. I think there are two bits to that story, and in particular with reference to, as you're saying, the turnaround. I think the bigger turnaround in a way has happened on the global beta for EM. I mean, do remember the overall currency complex on emerging markets is up almost 4% year to date. Part of that is probably the unwind of a lot of the dollar trades associated with the Trump administration and the start of the administration. I think data impulse globally, both in developed and emerging markets, has been fairly strong, and I think that's given a lot of encouragement to risk assets in general and to risk assets like in emerging market FX. I think there is a certain amount of comfort with carry more broadly as well, as the markets feel that while the Fed would tighten rates but would not necessarily do it at a faster pace, at least for this year, than what is priced in. So that's the broader beta story to EM. Now, the INR's outperformance within that, I think, is very much India's specific story as well. A part of it structural, part of it cyclical. I think a lot of sources of uncertainty associated with India at the start of the year have dissipated. Political risks for sure, particularly related to elections. I think the budget certainly outperformed expectations. I think the markets were very happy with the sense of consolidation which the government had presented. I think the overall fears around the impact of demonetization on growth have clearly been lessened and dissipated since then. Secondly, very strong inflows, capital inflows into almost $14 billion year to date. I think it's almost second to only Korea in the region. And that's obviously presented a much stronger flow backdrop overall, including with the foreign direct investment story, which has made the overall balance of payment story, basic balance story, very strong for India. And then I think third and last, I would argue very strongly, also a suggestion that currency management has become somewhat different. I mean, authorities do seem like they are a lot more tolerant of currency strength, whether it is because of the input they see from that into inflation management, whether it's a rethink on the whole idea of valuations and what that means for the trading sector, the export sector, or whether it is about issues like surplus liquidity and how to manage them. So I think it's a mix of factors, but certainly presents a case, we feel here, where the INR outperformance can certainly continue, both within the global context and within the emerging market context.
Samir, morning. What about the dollar index standalone? I mean, it's been trading at about a multi-week low, below that 100 mark. What's the trend looking like over the next, say, three months or so?
Yeah, I mean, I think, as I said, I think bulk of the dollar index sort of pullback, if you might, we've seen this year, has been to do with, initially, at least, the whole disappointment with the Trump trade. And I think of late in particular, as that administration has taken up more centrist views and policies on some of these issues, including if you've seen the latest comments from Donald Trump on the view on the dollar itself. I think that's really sort of kept dollar on a fairly soft note. And I suspect, and while there are multiple factors obviously playing into this, but I suspect for into the summer, we probably see this sort of flatlining to being on the softer side rather than being able to resurge immediately.
Okay. Well, let me just take forward your argument on the rupee. Actually, now what we are seeing is the current account deficit is getting bridged by FDI itself. You don't even need FII and, portfolio flows. So, therefore, the question to you again, are we looking at 62? What are you looking at year end or 12 months from now?
See, again, currency being a bilateral value has always, you've got to consider the India side of the story, which almost certainly is fairly positive structurally. And the point you make is very valid. In fact, a point we've been making for a while, that I think the best position for a country like India to be in is where its deficit on the current account is completely funded by just its long-term foreign direct investment, and makes it a lot less vulnerable to swings on the portfolio capital flows. But at the same time, and to the extent that there is a broader dollar element involved as well, and in particular the risk that into the second half of the year, as stories like balance sheet adjustment by global central banks, potentially a faster pace of tightening by global central banks, probably tapering by the Europeans and eventually by the Japanese, and certainly for the Fed to be hiking rates, and we suspect into 2018 at a faster pace than what the market is expecting, I think will still probably give more lift to the dollar. So you will need to see, for dollar rupee bilateral cross, a lot will also depend upon how the dollar plays itself out. But I think fairly confidently INR will outperform where the forwards are suggesting at this stage.
Okay, you refuse to give us a number? 62, 63?
I think, look, I think in the near term, obviously 63.5 first as a technical level on sort of a 50% retracement from where the move began in 2014, and then closer to around, I would say 62, which is, if you see, were the levels around which we normalized after the taper tantrum, I would think would be very critical levels in the next sort of 3 to 6 months to watch for. I think beyond that and into third quarter and towards the end of the year, I would argue that the global trends on the dollar will become very significant about whether we go from there to 60 or we kind of go back towards the 64, 65 kind of levels.
My God, have we ever heard these numbers in a long, long time? Thank you very much, Sameer Goel, for putting that discussion on.